Hello and welcome to the Credit Union Connection. I have the amazing Bo McDonald with me, CEO, founder of your marketing company. Welcome.
Thank you very much for having me.
Now, why don't you give us a little bit of your background, which is varied and interesting, as well as your marketing company.
How far back do you want me to go? I'm getting to the age where we can spend 30 minutes just giving my background on hold on, but radio. It started in radio when I was in high school. That was my dream job. I did it. And of course it got corporate, and I realized I will be poor and happy, but I won't be broke and unhappy. So I ended up getting out of that, starting a marketing firm. And lo and behold, our marketing firm turned into a marketing firm for credit unions. I'd been involved in them from a young age. My father was on the board of his credit union. I'd been a member of credit unions, and all of a sudden the worlds collided where, here's my life, here's credit unions, and that's what it's been for the last 15 years.
Very cool. Yeah, it's so funny how you're either born into credit unions or you fall into credit unions. So you're on a mission to prevent unnecessary credit union mergers, and we're seeing a lot of them. Credit unions are a quarter of what they were, I think, in the 70s, as far as the number of credit unions. What do you see as the primary issues that are driving the credit union mergers today?
In terms of unnecessary mergers, because there's some that are good.
Sure.
We've facilitated a few where it just made sense, where together these organizations are stronger, can serve their members better. So I don't think I know I'm known for railing against mergers, so I don't want people to think I'm totally against them. They make sense sometimes. But I think the unnecessary mergers, it comes down to two things. One is selfishness and ego. There's a lot of payments happening to, I know it's not a purchase of a credit union, but sometimes under the table, it's the purchase of a credit union, buying off a leadership team. And
Mhm.
another is pure fear, fear of change that keeps the credit union from being relevant, and they end up having to merge. And sometimes those two things collide as well.
Yeah. I mean, there was a story I wrote about probably a few, more than a few years ago now, where the last Sears credit union was going out of business. I don't remember if it was a merger or folded or whatever, but yeah, it's like, how could you not see that coming? How could you not do something? But yeah, that fear of change definitely, whether it's change in leadership, change of board, change of processes, policies, offerings, definitely I'd see that as a driver as well. And change is scary, and we'll talk about that a little more. But first, can you share an extreme case where a credit union avoiding merger and how they were able to turn it around?
There's one, I wouldn't say they were close to merger, but doing nothing uh, over a few years, it probably would have been. And I'm so damn proud of them. Bridgeton on Ice in New Jersey. Uh, when Tammy reached out to us to start working with her numbers weren't great, and she knew that, and she'd kind of taken over this credit union and was left to figure out what do we do with this thing. And capital was around 7% negative net income. There was no growth, and I wish I could pat myself on the back and say, your marketing company turned this thing around for Tammy. We were a part of it, but it took a lot of work on her end to reimagine, what does the credit union look like? What changes do we need to make? What staffing changes do we need to make? What processes, policy? And I know she still has a lot to do. She's a small shop, so I know she's got a lot of work to do. But just the things that she was able to do over the course of 12 months, turn that credit union into 9% net worth, positive net income, loan growth, membership growth. And it wasn't rocket science. It was just removing fear and making some tough decisions.
Yeah, I think that's interesting too. And you talk about this a lot. The actual strategic role of marketing is not just making posters. It's not just putting an ad out on Facebook. Um, so one of the things that I think is really interesting about your marketing code too is that you guys dig deeper than just how am I going to grow these members or whatever the objective is. It's what's keeping you from doing that to start with. Um, I don't know if you want to talk a little bit about that too.
I always know when we get a call and someone says, we have a problem, we need marketing to grow. I know that we can help, but I also know there's something keeping them from growing now. I've seen several great credit unions that are not marketing rock stars, but they're great at serving their members well, and they grow just by doing that. So, you know, we talk about this all the time. Ask a freaking question. That's really what we do when we come in at the beginning of an engagement, is try to figure out what's keeping you from growing now. And I think back to a credit union, our onboarding process is 2 days where we lock the leadership team in a room and hold them hostage and pepper them with questions. And I remember one of them, it was about 3 years ago, said, we want 10% loan growth. I said, okay, based on your numbers, that's not undoable, but why aren't you getting 10% growth right now without us? And it come to find out it wasn't because people didn't know them. They had a great volume of loan applications. The problem was when we dug deep and asked a freaking question and dug into the numbers, it's taken them 3 or 4 days to respond to a loan application. So to me, it was a red flag, but also a green flag. If we come in and just start marketing for you, also we're going to compound your problems. You're going to get more loan applications. You're going to be more underwater. Solve that problem first. And when they did, they started seeing some loan growth before we even turned on the marketing faucet.
And that's the thing too, you know, you're making sure you're setting up for real success versus just being able to say at the end of the day, look, we brought you in more loan applications. You just didn't approve them. And that's often like the rub between marketing and sales too.
To Bridgeton, you know, just bringing us on didn't make the change for them. It certainly helped. We were able to play a part in that. But it was Tammy and making the internal changes with operations and processes and taking a different look at their risk tolerance that really made the difference.
Yeah, so a lot of it's about leadership, and I know you started the Accident Leader podcast. You want to just talk a little bit about the purpose behind that, because I think while it's not credit union specific, it certainly is applicable.
I failed so many times as leader. I figured out maybe if I can share some of my stories, and the whole point is to bring in other guests too, that they can share their stories. If we can take accidental leaders and share stories and commiserate, but also learn from each other, I think that's pretty powerful, because I don't know too many people, the leaders we work with, the leaders on my team. One, I don't think anyone at 15 said, I'm going to be in credit unions.
Not many.
Nor do I think anyone said, I'm going to be a great leader. We didn't study that. I actually just recorded our next podcast this morning, and I went solo with it, and I just talked about the root system, because we talk about it in just about every podcast episode we do. In the root system, we learn how to lead, we learn how to communicate and talk to people and work with people through our parents, our grandparents, teachers, leaders, and those aren't always great examples for us to follow, but it's all we have.
Right. Yeah.
Having gone through 4 years of leadership school, we lead the way that we're taught to lead by those folks that are in our root system. And if you just think that this is the way I am, you're not going to change. But if you realize why you're that way, and you can change, if you recognize, why do I act this way? Why do I communicate this way? And dig a little bit deeper into the root system, you know, those leaders that are afraid of fear. Why is that? Were they taught from a young age, don't take risk, get a 9-to-5 job, you know, what's what they've been taught. You know, it's not, most of the time it's not malicious. It's not that the credit union leader doesn't want the credit union to grow. They're just following that path. This is how I've been taught to lead. This is all I know. Yeah.
No, I remember graduating college, and my dad had been a pretty high level intelligence officer for a while. And my mom was always like, get a job in the government, get a job in the government. It's stable. You'll have a job. I was like, no.
My father was the same way. He'd had the same job from the day he started out of high school through the day he retired. And I remember when I said, Dad, I'm leaving radio. I'm going to open my own business. I thought he was going to be on the first flight from New York down to South Carolina to beat some sense into me and say, what are you doing? Why are you leaving a steady paycheck? I was too young and dumb to know the difference, thankfully. At that point.
Well, and the thing is too, it's like having all your eggs in that one basket. frankly.
Yeah.
Um, but so yeah, one of the things you mentioned a couple times already is asking a freaking question. So your marketing company is coming into its 15th year. Congratulations. And you're doing that same thing for your company's future. So has it been difficult to experience a taste of your own medicine? And what sort of realizations have you and your team had going through that process?
The conversation started last summer, and we met as a leadership team in August. And I can't tell you how many pairs of drawers I've had to throw out because I've soiled them over the last 9 months since we've been going through this, because I've scared myself. But I looked at us coming into year 15 and thought about how much we've changed. And I actually had to think about how much we hadn't changed. And the reasons we hadn't changed were the same reasons a lot of credit unions don't change. We're comfortable, we're profitable. Why do we need to fix something that's not broke? But as I look at an exercise we did as a leadership team at YMC, we looked at what did the world look like 15 years ago. And it was a very different world. The iPhone had just come out.
Right.
It was version 2, so you were still on Facebook and Candy Crush, and there wasn't a whole lot of use for the iPhone at that point like we have today. We didn't have, a mobile banking app. We didn't have Venmo. So banking was a whole lot different, which meant we did business a whole lot differently. And as I looked at how we were still doing business, our marketing plans, we hadn't changed enough in 15 years.
Mm-hmm.
And of course, I had a taste of my own medicine. When I do strategic planning, I'm constantly talking about focus on your ideal member, not your legacy member. We still want to honor them and serve them, but we have to build this credit union around the ideal member. And it was reminded to me, hey, we have to build our business around the ideal client, not just the legacy client. We need to honor them, but we're not going to be here in 15 years if we're not doing that, which meant making some really tough decisions, changing our marketing plan, making some big investments in stuff, which is all scary, but it's all the same stuff that I ask our clients to do. I realized when they do it, it turns out so well for them. And I almost go back to, I wrote a blog on CU Insight about this years ago, the Dr. Seuss book, What Was I Scared Of? It's one of the lesser known Dr. Seuss books, but in the book, the character goes out at night and there's a pair of personless green pants. And he's scared of them because it's a pair of green pants walking around with no one in them. And he's scared of them, but he realizes, wait a minute, the pair of green pants is scared of me. And the whole point is, you never got to know the green pants. You're scared of this thing, but you don't know why. It's because it's different, it's new, it's something you're not used to. And I had to reflect back on that and how much I preach that book to our clients that are scared of change.
Dr. Seuss is so many great business lessons. Seriously.
There are. I did an entire year's 12 versions of articles for CU Insight 1 year, just based on different Dr. Seuss books. And yeah, they're kids' books, but if you read them as an adult, they have an even stronger meaning.
Yeah, absolutely. I 1 year at Credit Union Times, when we did our Trailblazer Awards, I gave out copies of Dr. Seuss books to the winners because they were so relevant to what they were doing. It's very interesting. And speaking of that too, I think and the ask a freaking question, and as a recovering reporter, one of the things we stopped doing, and it's part of the fear thing, but also the curiosity, we stop asking why. When you're 3, 4, oh my God, I remember my kids at that age. It's like, why is the sky blue? I don't freaking know. But the constantly asking why to get down to the actual issue, as you pointed out with, the credit union that had loan applications coming in, they just weren't going out the door either. They weren't getting funded. So asking why is so important, and we so don't do it.
Yeah, I always say, in strategic planning, we say we want loan growth. The question is, why aren't we growing loans? Our tendency is to first solve the problem before we know what the problem is. And we fail so many times to that because we don't have the perspective. We hear, a client could say, we need loan growth. And if we just go and create a fun campaign, well, we don't know what kind of loan growth do you want? What is your risk tolerance? Who's your ideal member? What problem do we need to solve for them? Why aren't you growing loans? Let's answer those questions. And then we gain perspective on what the actual problem is. Now we can solve it. We've got a better chance of success with that.
Yeah. And so what are some of your favorite small credit union survival stories? You mentioned Bridgeton on Iced earlier. You got some others?
HopeSouth is one. They're in Abbeville, South Carolina. It's one of the first ones. Gosh, we've been with them 13 years now, I think.
That says a lot. Yeah.
And they've got such a cool story. The CEO 13 years ago, I believe they were about 12 million in assets at that point. And the CEO had gone through a life and death experience. She'd been in a medically induced coma for 6 months. And she wasn't expected to survive. And at that point, no one expects a $12 million credit union to survive, especially without a CEO for 6 months. And she came back and said, I've got a second chance of life, and I'm going to infuse that into the credit union too. How can we sustain and survive, but also grow? And the board went offsite for 3 days, locked themselves in a room, and they went from Greater Abbeville Federal Credit Union that had a mission of, we'll be the main provider of products and services in the financial services industry in this small county of 13,000 people. Well, when we dug into the numbers, unemployment was over 10%. They're an hour and a half from any interstate access. It wasn't a growing area. It was a very financially depressed area. And banks were pulling out left and right because they couldn't do anything. The risk tolerance wouldn't allow them to really serve anyone there. And that's when they restated their mission as being the source of financial hope in our community. They revisited their risk tolerance, their policies, who they were as an institution. And today they're just over 30 million in assets with ROA over 2% consistently.
Wow.
Every year. So at 30 million, I know people are still looking at them saying, oh, you'll never survive. Well, the numbers say otherwise. I can't look into a crystal ball and say what 5 years holds for them, but if they continue to do what they're doing, stay true to their mission, I think they're going to continue to not only survive, but grow.
Yeah, absolutely. And I think you've also brought up ideal members quite a few times during this video. And I think there's some confusion around that too, because I've heard before, about focusing on an ideal member, but then some board CEOs, what have you, are scared you're going to annoy the ones that are not, or not serve people who aren't your ideal member. That's not the point. Can you talk a little bit about the ideal member?
I get pushback on that a lot. So when I do, I always say, okay, so your ideal member is anyone that needs a loan. We don't want to exclude anyone. If you need a loan, we're the place to be. So I start narrowing that down. Okay, so I need a business loan. I need to buy 5. Oh no, we can't do that. Okay, so you won't do business loans. Okay, I'm a first-time home buyer. I need a mortgage. Oh, we don't do mortgages. We can outsource it, but they're not great. Okay, so you don't want real estate loans. I'm a first-time car buyer. I have no credit. Oh no, our policy says we can't lend to people. Okay. And I start going down this list, and I realize you're starting to tell me who your ideal member is. You're already saying what you won't do. Now we have to decide, do you still want to continue not to do that? Or do you feel is there opportunity there once we figure out, once we knock off this list of all these things you won't do, now we know what you can do. Do we need to bring some of that stuff back in? Do we need to think about that ideal member and how we can serve them and rethink risk?
Yeah. And credit unions, they tend to be not lower risk lenders. There are certainly some, the CDFIs are amazing. But there are certainly some that are like either an investment club or they, or maybe they won't lend to below A paper, B paper, maybe. What do you say?
You know why you can't do that? Because your loan losses are going to go through the roof. Too much risk. I don't know how these other credit unions are doing it. They don't ask a question. They don't ask to find out.
Exactly. How are they doing it?
That they assume that D&E borrowers are just garbage humans that are not going to pay them back. instead of asking for the story, instead of looking into these other credit unions that are doing it successfully. Hope South, you look at their delinquencies, they average about 1%, which would give many boards a heart attack. But when you look at your ROA consistently at 2%, are you willing to put up with that delinquency for this bigger piece of success?
Right.
And, the other thing is understanding how to lend. We've got a credit union right now that's just diving into this, and they were gung-ho. They're ready to start making these loans. I said, don't do that yet. You got to get your lenders trained. You've got to get them in the mindset of how to ask the right questions. How do you lend? You've got to look at your policies and make sure you want to do these loans. Can you actually do them? There's a lot to it. I think that's what scares a lot of people, because the fear of the unknown. It's not just, I don't want to do it, but how do you do it?
Well, and that ROA is how you feed back to the members too. That is how you serve your members. So getting that up is important. And if it means your delinquencies go up from 0.6 to 0.8 or what, it's still well below peer average.
Yes. Yeah. I think back, I know we don't like to use the word profit, but really having that income is the only way that we can continue to serve our members and invest in the credit union. There's a book called, I can't remember the name of the book. He's got one out, Rabbi Daniel Lapin. And in it, he says, you should not be ashamed of profit. If you're doing good, that green certificate you hold in your hand is a certificate of a job well done. You're getting that for actually, doing good work somewhere.
Yeah, and not for profit, which it drives me nuts when people call credit unions nonprofits. Not for profit doesn't mean you're not supposed to make a profit. You need enough to continue to survive.
We forget that second part, but not for charity.
Right, that too. So anyway, we've covered a huge range of things.
Have we gone off the rails? I think you gave me an outline. I think we've covered about 5% of that.
Oh, we covered all that, just another 100%. That's all good. So any parting thoughts, words of wisdom that you have for credit unions, for marketers, for whatever, that's going to help credit unions survive, because that's what we're all about.
I think you just have to search deep in your soul and think about what you're doing right now and why you're doing it. As we've changed our mission and vision, that's kind of our litmus test of decision making. At YMC, it's not too far off from where we were, but our vision now is we want to help credit unions educate, engage, and retain the next generation of members, because our purpose is to avoid the unnecessary merger of credit unions.
Right.
So asking why with everything. We're doing this printed newsletter. I keep picking on newsletters the entire time I talk about this, but it's the easy, low-hanging fruit. Why are we doing this newsletter? Well, Dan, the board chair, he loves his newsletter. He's been on the board for 30 years, and he loves that newsletter.
Heard that myself, yep.
So let's line that up with our vision. We want to help you educate, attract, and retain that next generation of members. Does us doing this newsletter help us accomplish that? Well, no, but no.
Yeah.
I think about what you want to accomplish at your credit union, what your position, whether you're a CEO or marketing or CFO. Think about the mission and vision. If it's strong enough, that should tell you what you should be doing or not doing. It shouldn't be a hard decision.
Right. Because the goal is all about the growth and the future of the credit union. So. Yeah. Awesome. Well, thank you so much for your time, Bo. I appreciate it, even though you got me up early.
As always.